2025 has been a great year, but SoFi has peaked. Growth is slowing, analysts are lowering their estimates, insiders are selling, and the company is diluting. Or at least that is what the bears want you to believe. In this video, I'm going to break down each of these bear arguments and ask the simple question. Is SoFi stock a buy or is SoFi a sell for 2026? Now, I've been following SoFi for a long time, all the way from only $6. It's the single most talked about stock on this channel. So if you love SoFi and want me to continue making these videos, then let me know in the comments. I'm not a financial advisor and this is not financial advice. These videos are for entertainment purposes. So if you enjoyed them and want to see more SoFi videos, then drop a comment and let me know. And please hit the thumbs up. It really helps the channel. Now let's get straight into it. Now something that I forgot to mention in my last SoFi video was that they are expanding with 225 jobs in Charlotte, North Carolina. And last week, Mecklenburg County approves incentives for SoFi's 250 job expansion in Palantir. This follows on from SoFi introducing the smart card and SoFi announcing the launch of SoFi USD, a fully reserved US dollar stablecoin issued by SoFi Bank. But it looks like SoFi are really getting ready for some major expansion now. If we look at their careers page on the website, they are looking for literally hundreds of new hires. Things are really ramping up right now, but is SoFi stock a buy? Some feel that it's not, while others are more optimistic than ever. And rightly so in my opinion. 2026 is going to be a huge year for SoFi, but how is it going to play out? This article looks at the top 10 stocks to buy in 2026. They have listed Lemonade, ticker symbol LMND, as their #1 pick, citing the growth in machine learning and AI algorithms while stating that net losses are narrowing and growth is accelerating. But the #2 pick here is SoFi, and they stated 2026 should be another terrific year for SoFi, as they're reporting accelerated growth in members and products and its strategy to cross-sell products to drive growth. At #5 here we have Walmart, #4 American Express, and #3 is New Holdings. This is another digital bank, one that I've been looking closely at over the past few months, and one that I have been asked a few times previously to make a video about. Let me know if you think that this is a stock that I should cover on the channel. This is an article on Seeking Alpha. SoFi, time to exit this fintech darling. Now, this is a bearish article written by the bears of Wall Street, whose very first point here is that SoFi has delivered strong Q3 revenue and member growth. And also, the growth is slowing and profitability remains early stage, while highlighting recent share dilution, insider selling, and analyst downgrades. So first of all, I talked about this share dilution in my video last week. They diluted by less than 5% of total stock. That is not a major dilution. That is strengthening the balance sheet, and those shares were sold at a higher price than today's share price. The other point here is that insiders are selling. Looking at Yahoo Finance, we can see that recent insider activity at SoFi, including 5 transactions totaling $9.5 million. The majority, 4 out of 5, were tax-related stock dispositions, with 1 sale by a senior executive. Here we see that Jeremy Rochelle did sell 91,000 shares on December 17th, worth approximately $2.45 million. But he does still hold over $21 million worth of stock. If we look at the recent Form 4s, we can see that sale. We can also see that Kelly Kyo sold 64,000 shares, Chris Lapointe sold 74,800 shares, and Anthony Noto himself sold over 305,000 shares. Now, the bears of Wall Street would want you to believe that these sales are being made because management don't believe in the company. It says it here, selling after a quarter that was positively received by the market suggests that management see limited near-side upside potential relative to valuation. Investors often view insider selling as a signal. But the actual fact is that most likely reason for these sales is tax purposes. Each of these stock sales came after stock bonuses were awarded. Anthony Noto sold 305,000 shares, 53% of what was awarded. But look at the code here. This is a code F. The F transaction represents shares withheld to cover taxes. It's the exact same with Kelly Kyo, 53% of shares sold, and again code F. And the same with Chris Lapointe. While Jeremy Rochelle sold his 91,000 shares, these were actually sold on the market. It's not a code F, this is code S. But if we go back just a few days previously, he was awarded over 1 million shares on December 8th. So the idea that SoFi insiders are selling shares because they see limited near-term upside potential is ridiculous. The bearish article continues by saying that Wall Street analysts have lowered their earnings per share estimates for the next 2 years. This change is particularly significant because it came despite a strong performance during the quarter. That Wall Street analysts are factoring in slowing technology platform growth, rising operating expenses, and higher booking expectations. Looking back at the investors' presentation, tech platform accounts have increased massively over the past 5 years, just a little dip in the last quarter. But as for revenue, Q3 2025 was higher than any other quarter to date. Now, the percentage contribution margin and profit may have dropped, but that is due to the fact that the contribution profit from other segments has greatly increased. As for analysts revising SoFi downwards and lowering expectations, this is SoFi's revenue estimates versus their actual revenue over the past few years. Every single quarter there has been a surprise beat. That is clear as day, going back as far as 2021. And it's the exact same story with the EPS. There has been a surprise every single quarter, and some of those have been huge. The only time one of these surprises was negative was back before SoFi turned the corner to profitability, back in 2023 when the stock was trading near its all-time lows, and there was no optimism around SoFi as a business. If anyone remembers, SoFi went public in 2020 through a SPAC merger, just like hundreds of other stocks. But throughout the years 2022 to 2024, a load of SPAC merger stocks went bankrupt or were delisted. So there was a very bad sentiment around any stock, even the good companies that went public this way. And SoFi is one of the good ones and is going in the right direction. Now, there is no arguing with that. Another thing to consider is, just yesterday it was announced that Brighton Jones trimmed its stake in SoFi by 2.8% in Q3, selling nearly 20,000 shares and holding 696,000 shares worth about 18.4 million after the sale. Orient Private Wealth raised its SoFi stake by 21%, up to 125,000 shares. While Kessler Investment Group acquired 158,000 shares of SoFi in Q3, making SoFi 1.8% of its portfolio and the fund's 20th largest holding. If we look at Fintel, we can see that institutional ownership of SoFi stock has been increasing every month and now stands at its highest level ever in December 2025. One thing is clear, there is a lot of investment funds increasing their positions, and of course there is a lot of optimism. And why wouldn't there be optimism? SoFi is growing its members at the fastest rate than ever before, and their cross-selling strategy is also seeing strong growth in new products. It looks like the adjusted net revenue and adjusted EBITDA are set for new record highs when we come around to full year 2025 financials being released, and these will be released on January 26. So if you would like to see a SoFi earnings preview before that date, then let me know in the comments. I hope everyone has a wonderful Christmas. Remember that I'm not a financial advisor and this is not financial advice, just my thoughts on some of the things I've been reading in the past few days. If you enjoyed this analysis, then don't forget to like and subscribe, and I'll catch you in the next video.